Hey everybody, Gary with Basecamp Trading. Let's take a look at gold today. Today was Fed Day, and you can see that gold throughout most of the daytime session just chopped around, up and down, back and forth, wicks up, wicks down, wicks up, and just lots and lots of chop back and forth. And then we had our FOMC announcements, and that's what we were waiting for. All this chop was just waiting for the FOMC minutes to be released and the announcement to be released. Of course, there was no change in interest rates. I don't think anybody thought there would be. But what we ended up doing was triggering a one green finger on this chart, which is a bearish momentum trade. We had a nice push down. Our target was 1848.50. The low of that bar ended up being 1848.20. Also, right down to the 200. We know that the 50 and the 200 are significant support and resistance. So we had this really nice push down right down into target for a nice trade to the downside. And then Jerome Powell started talking, and he was very dovish and very encouraging and positive for the market. And you can see that gold just ripped back in the other direction, actually went up into new session highs. So lots of movement on Fed Day. Gold especially can be like that on Fed Day. So good trade to the downside, and we actually were able to take advantage of some of this movement to the upside. And we were trading that on our Heikin-Ashi chart. This is a chart we don't show very much, and we don't talk about very much, but nice setup. This is a very rules-based chart in on the dojis, out on the color changes. But right here we had a slow line zero touch, which was the slow line on MQ momentum, moving up to the zero line. The zero line is the line that the histograms move above and below. And then we caught a nice push down. That's when we were triggering that one green finger. Now we went down into our target zone. That was a significant support zone. Now this would have been a really aggressive reversal back to the upside, but had you taken that, you would have taken that trade all the way up to the color change. So you would have been in on the reversal doji at roughly 1850.60, and you would have stayed with that all the way until 1858.50. So you could have potential. Again, if you were aggressive, depends on how aggressive a trader you are, but the potential, grab $800 per contract on that move up, pulled down, got our wick off the 18. This was a nice trade that we also had in the room this afternoon. Your trigger would have been in at 1860.60. And we had some upside targets here, so you could have either traded to our upside targets, but if you're following the strict Heikin-Ashi rules, you would have been in at 1860.6 and out at 1864.9. So potential to grab roughly $400 per contract on that trade. Again, depending on how you're trading it. We actually had some upside targets that would have actually netted us a little more, but again, if you're just strictly following the rules, in on the doji, out on the color change, in on the doji, out on the color change. Had another doji here that you could have been in. You probably weren't trading this. We'd already were getting extended and forming divergence right here, so probably weren't interested in that trade. If you had taken it, that would actually been a small loss because you'd have been in on the doji at 1867, and you would have been out on the color change at 1867.30. So I guess it wouldn't have been a loss. It would have been only $30 on what could have been a couple $100 move, but depending on how you're trading it. But either way you look at it, still very rules based. Again, you just in on the doji, out on the color change, in on the doji, out on the color change, in on the doji, out on the color change. Same way here, just in on the doji, out on the color change. And you can trade that chart that way. We use all our same filters. We don't just take every doji, every color change. We filter them with our criteria that we always use every day. But again, it's a kind of a simple black and white. People who aren't sure how to stay with a trade, this is one way that can help you stay with these trades longer and catch the runners. So anyhow, a couple nice opportunities to take advantage of movement on Fed Day in gold.